Welcome to the channel. My name is Gary Singh. Today we'll be talking about a few different topics. The main one being fund allocations to Bitcoin. But before we get into that, like always, we'll start out with a market recap of the events that occurred over the past 24 hours. So I have the weekly chart pulled up for Bitcoin. We're currently trading at $66,111. And if we look at what occurred yesterday morning on March 5th, 7 a.m., we broke the all-time high for Bitcoin. And the new all-time high for Bitcoin as of this recording is $69,324. So congratulations to all the believers, all the hodlers out there. But that excitement was short-lived because over the course of 4.5 hours, you can see the price go from $69,000 and some change down to $59,000 and some change. That's a significant $10,000 drop. Everybody, at least all the crypto moon boys, were hoping for a God candle to cycle. It's not the God candle that everybody had hoped for. For those of you not familiar, a God candle is when the price of an asset changes by $10,000 or more. The crypto moon boys wanted it to go in the other direction, but we did get a reverse God candle. So we'll explore some of the reasons why that occurred. The big reason is there was a Bitcoin/Euro flash crash on Coinbase. Surprise, surprise, another crash on Coinbase. Coinbase has been notoriously known to be unreliable at times of peak demand, peak traffic on their applications. So that's something that happened yesterday, which caused the price to shoot down by so much. So that's primarily the reason why we had that reverse God candle. So this is the third incident that we've seen in this bull market where Coinbase had degraded performance or completely just failed altogether. We'll go to another chart that we looked at often, which is the Bitcoin ETF flow table. So as we know that all of the Bitcoin ETFs, at least the majority of them, are getting big inflows, especially Fidelity and BlackRock's Bitcoin ETFs. You can see that IBIT, which is BlackRock's Bitcoin ETF, had an inflow of $788 million on March the 5th. And if we go to the Fidelity column, they had an inflow of $125 million worth of FBTC shares that were purchased. And the big elephant in the room always is GBTC outflows. It seemed like the outflows were diminishing as of February the 26th, when the outflows were $22 million. It seemed at that point that was the end of it, that there wouldn't be any further significant outflows. But we can see that over the following 6 days, the outflows have increased from $125 million on February the 27th to $216 million on February the 28th. Up to $598 million on February the 29th. And yesterday, March 5th, we had a significant outflow of $332.5 million. But there's only so long that these outflows can happen. The reason why these significant outflows are happening is probably due to the Genesis bankruptcy. So Genesis is dumping their shares in GBTC, or are slated to if they are not currently. It's speculated that this is that Genesis dump, which would probably explain why we had this significant uptrend in the outflows. But there's only $1.3 billion worth of Genesis shares in GBTC that they need to dump in order to reimburse their creditors. We've crossed well beyond that figure in the last 5 or 6 days. So if this is in fact Genesis dumping, then we should be near the end of it, hopefully. So that's kind of the market recap over the last 24 hours or so, which kind of explains why we've seen so much volatility over the last 24 hours. We've been as low as $62,000 and all the way as high as $69,400. And we're kind of bouncing between those two numbers over the last 24 to 36 hours. Some news from last week, which was significant news. It didn't have a big impact on the price of Bitcoin, but it is definitely setting a narrative, which is important. That could cause a big upside in terms of price action for Bitcoin, and that is the funds have started to allocate money to Bitcoin ETFs. So the first fund to do that was Fidelity Canada's all-in-one conservative fund. I have their official website pulled up, and we see four funds: the conservative one, the balanced, the growth, and the equity fund. And you can see something that's very different, that's never been seen before, is there is a 1% allocation to crypto on the conservative fund, which is very big news. And then for the balanced fund, there's a 2%. For the growth, there's 3%, and for equity, 3% as well. So these funds don't have a lot of assets under management. If we open up the fund, we will see that the conservative fund has only about $200 million in it. So allocating 1% of that to Bitcoin is not really going to push the needle. Let's open these other funds up as well. We have the balanced one that has $675 million, a little bit bigger of a number, but really not going to push the needle. Then we have the growth one, which has $347 million in assets under management. And these are Canadian dollar figures. So if you were to convert this to US dollars, it would be even less. And then finally, the equity ETF, which has $218 million of assets under management. So this is great news. It doesn't really impact the price much, but there are other fund providers that are going to look at that, and they're going to start to copy this and maybe allocate 1 to 3% in their various different fund offerings. And we're already seeing that. So this was news from last week, and the big news from yesterday is that BlackRock Strategic Income Opportunities Fund, which has about $36 billion worth of assets under management. So BlackRock filed an amendment to this fund with the SEC, and in that amendment, they mentioned that they would allocate some Bitcoin to this fund. Now that's significant. I think all of those Canadian funds is a good start. It changes the narrative, but those numbers are very minuscule compared to these BlackRock Strategic Income Opportunities Fund, which has $36 billion of assets under management. If we take even a 1 to 3% allocation of that, that could be very significant. So really good news there. And then I expect other investment firms that have funds that they're offering to also do something similar. I think the traditional 60-40 stock versus bond structure is going to be disrupted. I think we will see maybe something like a 60% stocks, 35% in bonds, and maybe up to a 5% allocation into crypto. And we're looking at $100 million in the stock, $100 trillion, in the stock market that is currently invested worldwide. There's over $100 trillion invested in the bond market worldwide. So you're looking at over close to $250 trillion across stocks and bonds that's invested worldwide. And even if we get a 2 to 3% allocation of that, that is going to be significant. Let's take an average number between 1 and 3%. Let's say there's a 2% allocation. That becomes the norm. Something like a 60% stock portfolio with 38% bonds and 2% allocation to Bitcoin. So 2% of roughly $200 trillion is $4 trillion. Our market cap of Bitcoin currently is 1.3 trillion. That would mean tripling the market cap of Bitcoin, and Bitcoin is currently trading at, let's see what it is, $66,238,000. If we were to triple the market cap, we would be looking at a price of 66 times 3, almost a $200,000 Bitcoin, and that can happen very, very quickly. So very, very positive news there. And the last article I want to share with you is that Stanford's Blythe Fund, Blythe or Blythe, I'm not sure how it's exactly pronounced, allocates 7% of its portfolio to Bitcoin. And, you know, most of the big universities, they have their own funds that they manage. They have their own endowment funds. And this particular one is managed by the students at Stanford. And the fact that they're allocating 7% of the fund to Bitcoin is big, big news. There's going to be other copycats in the academic institutional world that are going to look at this and try to replicate that. And Stanford itself is a very prestigious name, so if they're doing it, it kind of gives it some sort of stamp of approval for some of the other academic institutions to go ahead and do that. And this is also a reflection, the fact that this is a fund that's managed by students and they're allocating 7% of the fund to Bitcoin, which is quite significant. And the reason why they're doing it is because those students at Stanford, they are not the baby boomers. They are Gen Z or Gen X, whatever the alphabetical letter is. I lose track of these various generations, and so they're kids that were born and brought up in a digital world. They get it. They understand it. And so that's why you can see them, allocating such a significant portion of the fund to something that they understand, and something that is in the digital world and something that they grew up around. So it's a lot easy for them to kind of understand it and see the value of it, as opposed to maybe older generations like the baby boomers. So all in all, very good news. So that's the end of the video. I hope it was informative for you. And if it was, I would appreciate a like, comment, subscribe, or a share. That would go a long way. Thank you.